At Scube Wealth Grid, we believe it's time to re-examine the age-old question, are gold and silver still the ultimate safe havens in 2025? And what role should they play in a modern portfolio? For centuries, precious metals like gold and silver have been considered the ultimate store of value, outlasting empires, wars, inflationary cycles, and market crashes. And while today's world is dominated by digital assets, algorithmic trading, and tokenized finance, the truth is that gold and silver have never lost their relevance. They've simply evolved in how they function within a portfolio. In 2025's climate of geopolitical uncertainty, rising debt levels, central bank intervention, and growing distrust in fiat currencies, investors, especially the ultra-wealthy and sovereign funds, are quietly increasing their allocations to gold and silver as a hedge against systemic risk. Gold remains the go-to hedge against currency debasement and inflation, especially as many countries face pressure from de-dollarization and high fiscal deficits. In fact, central banks around the world are buying gold at record levels, signaling deep concerns about long-term monetary stability. Silver, while often overshadowed by gold, brings unique advantages. It's both a monetary metal and an industrial commodity, critical for solar panels, electric vehicles, and electronics, which positions it as a strategic asset in the green energy revolution. This dual role means silver can benefit not just from financial instability, but also from technological demand and supply shortages, making it a compelling addition to forward-thinking portfolios. In a world where digital assets like Bitcoin are often touted as the new gold, it's important to note that while crypto offers high upside and innovation, it lacks the centuries of trust, physical tangibility, and proven correlation benefits that precious metals provide during crises. Gold, in particular, has a low to negative correlation with equities and bonds, making it one of the most effective diversification tools during market stress. In modern portfolios, gold and silver are no longer just vault assets. They can be accessed via ETFs, tokenized metals, mining stocks, and even fractional digital platforms, allowing younger investors to gain exposure without dealing with physical storage. The wealthy also use gold to discreetly store value in politically neutral jurisdictions or through allocated vaulting systems offshore, preserving privacy and protection from local instability. However, like any asset, allocation matters. Most experts recommend between 5–15% of a portfolio in precious metals, depending on risk appetite, macro outlook, and exposure to fiat currencies. Precious metals won't make you rich overnight, but they will help ensure you stay solvent and secure during global dislocations. They act not just as an investment, but as portfolio insurance, one that doesn't rely on someone else's solvency or promises. As AI, wars, and interest rate policies reshape the financial landscape, gold and silver remain the quiet guardians of wealth, unmoved by hype, anchored in history, and indispensable in the long game. At Scube Wealth Grid, we decode these timeless strategies and help investors, new and seasoned, rethink how to balance risk, protect their capital, and preserve purchasing power through whatever storm may come.